Bitcoin jumped to a record high this morning, topping $66,000. It is riding that wave of excitement after the successful launch of the first U.S. Bitcoin Futures Exchange Traded Fund, or ETF. So what does that mean? And is now a good time to jump in? Joining me now live over Zoom to talk about the rise in popularity of the cryptocurrency is financial advisor Michael Godwin. Thank you for joining me tonight.
Thanks, Megan.
Let's start off with a quick refresher because I feel like I'm still confused. What is Bitcoin?
Yeah, it's a great question. So Bitcoin is essentially a digital currency, meaning everything is stored online. So you can't actually hold a Bitcoin in your hand, much like you can with a $5 bill. Now, overall, I think there are two ways to look at Bitcoin. One is as a store of value, and the other is as a medium of exchange. So a way to buy things online. Today, it's mainly used as a store of value. So think of it as a competitor to gold. Investors don't own gold because they're going to use it at a restaurant or go buy a cup of coffee. They hold it because it's a store of value. And the reason for this is there's a limit to how much gold can be produced. And it's the same for Bitcoin. There are a finite number of Bitcoins available. Also, I think some investors hold gold and Bitcoin because it can sort of be seen as an inflation hedge against US dollars. That's one of the reasons why I think Bitcoin has done so well recently. But longer term, Megan, I think the bull case for Bitcoin would be if it actually becomes a viable medium of exchange, if people truly end up purchasing goods using Bitcoin. But again, I think that's a number of years down the line.
These Bitcoiners are rejoicing today. Why is that?
Yeah, so the Bitcoin Futures ETF, and the ticker is BITO, that debuted yesterday on the exchange, and it became the second most heavily traded ETF on its first day of trading ever. So the demand for Bitcoin is certainly there. But I think regarding this ETF, I think there's a very important component that investors need to be aware of before they invest in this particular ETF. And I don't want to get too technical here, but this is what's called a futures ETF. So it's not actually owning it's not actually owning Bitcoins. It's holding futures contracts on Bitcoins. So long story short, this ETF is an easy way for investors to get exposure to Bitcoin. But in our opinion, it's not the best. We think if you want to own Bitcoin, or really any cryptocurrency for that matter, you should actually buy it and not buy a derivative of that asset, which is essentially what this ETF is doing.
Okay.
So to actually buy Bitcoin, Megan, the process is fairly simple. You just need to open up an account on a platform like Coinbase, or you've probably heard of Robinhood. And from there, you're able to purchase Bitcoin. But if it ends up being a touch confusing, I'm always available and happy to help any of your viewers if they need assistance with this.
It is still volatile. It is still very early. Are people asking you if it's smart to invest right now in this?
Yeah, we've had clients ask this over the past couple of years. Typically, they ask when the price is very high, and they don't ask as much when Bitcoin sells off. I do think the one component of Bitcoin that both bulls and bears would agree upon is that it is still a very volatile asset. So I was looking at this earlier. We've seen 13 different times where Bitcoin has advanced or declined by more than 20% this year alone. Wow. So it dropped as much as 50% from May to July of this year. And since then, it's more than doubled. So wow. Yeah. As an investor, I'd say if you want to purchase Bitcoin, it should be a relatively small portion of your overall portfolio.
Keep it safe.
You know what? I don't think Bitcoin will go to zero. Investors just have to be comfortable with the wild swings that we're likely going to continue to see in this asset.
Michael, thank you so much for your time tonight and for your expertise. We appreciate it.
Thanks, Megan.